This session is chaired and will be moderated by Mr. Irfan Siddiqui. So Irfan Sahab, over to you.
Right, Bismillahirrahmanirrahim, Assalamu alaikum. Good to see that at least we've got a vast majority of our conference participants still there. I think after the heavy lunch, we were all hoping that the hall would be squeezed to half, like it normally happens in conferences, but it is good to see people around. So we've got, it's 3:30 now. We've got, I think, 1 hour and 15 minutes, Raza, for this session, or 1 hour. So it's 1 hour. So what I think is best to divide this session in some discussion and give a lot of time for Q&A. Obviously, our panelists, mashallah, all very senior people. Most of them I'm met before, and I'm sure you're all familiar with them. So without wasting time on that, so we got, mashallah, 5 of them. 6th, Mr. Najmul Hassan had to go on Hajj, so he was not able to join us. So instead of Mr. Najmul Hassan, I decided to have an imaginary figure there, which is called an eagle. So a bird, eagle. Urdu में क्या बोलते हैं उसको? चील, sorry. हाँ. तो एक चील जो है imaginary यहाँ पर लेकर आए हमने. How do we start that? So I'll show you a very small clipping which I got on a WhatsApp video. I thought it would be appropriate to start the session. I'm sorry, you would not be able to see this thing on the screen, but maybe through the mirrors you can see that. Right. The message I thought for this particular session with this eagle video was that we need to change ourselves. If we don't change, we'll be history. In my view, the banking is obviously going through the same dilemma that, if we don't really start thinking, maybe banking won't be there. Maybe, you know, we probably would be looking for a job. At my age, it's fine. I don't have to look for a job. But young people, you know, who are in this audience would need to get worried because they need to do something. So we need to not just train ourselves, retrain ourselves, but, you know, accept changes. Accept changes that banking is done in a different manner now, and things would be very different from what they were, you know, when we were younger. How do I move the slide from this? This is a quote from Bill Gates, that banking is necessary, but banks are not. Very worrying that, you know, banking obviously will be there. We would all need banking services to be available, but the requirement of banks, whether they will be there or not, is doubtful. The new entrants in the market, if you see Facebook, Google, Apple, PayPal, none of them are new banks. It doesn't say ABC Bank or XYZ Bank in the United States. All the new players or the new entrants in the market which are in the payment system are non-banks, Facebook, Google, and Apple, you know. So obviously the fear is that one day they'll become so big that none of us would have a banking job. Maybe we'll have a job with the Facebook, but not in a bank. Smartphones. Somebody was saying that Rafe is always on a smartphone, so now he's got 2 devices of smartphone instead of 1. So smartphone will obviously become the foundational banking channel. So all the transactions will happen on a smartphone. Smartphone has the potential to know much more about bank's customer than human advisors know. So this little machine would know more about you than any human person can do. And it can go with you wherever you're going. So Rafe is sitting here right now in Karachi from Malaysia, but his entire thing is in the smartphone. And so is Dr. Zamir, you know, the entire World Bank is moving with him. So banks that will really survive will be those that offer facilities right now as it stands now on the smartphone. So if we are not really smart enough to do our banking on the smartphone, then I think we very soon will become history. There was a survey done in the US which shows that young generation, who they call millennials, how many of them actually visit banks and what are the frequency of visiting the banks. And it's very disappointing to see for people like us who got a lot of branch network banking that 38% do not visit the branches. So, you know, we spend a lot of money, time, effort setting up big branches, and 38% of the customers would not go to a branch. And then less than 1 visit per month is 26%. So if you put 26% and 38% together, that's 2/3 of the young population would go to the bank, either not go at all or go less than once a month. So obviously negligible. So only 1/3 would be there, you know, using our branch network, which is not going to be sustainable. And again, this survey, which is called the Millennium Disruption Index, it says that banking is at the highest risk of disruption. Obviously, we've seen a lot of disruption even in the mobile phone, that we no longer have typical cameras or alarm clock or video cameras or, you know, a diary. So it's all in there. So maybe one day, banking would all be there as well. So according to this index, banking is at the highest risk of disruption. So obviously this Illuminous panel with some practicing chartered accountant firms, 2 CEOs, World Bank, you know, expert, we can debate on, you know, is it right, or are we getting carried away with this mobile phone technology? I mean, banking will stay as usual. The way our grandfather did banking, we'll still continue to do like that. So maybe, you know, we can open up the discussion, and what I would suggest is that initially, because the topic is broken down into 3 parts. The first is, are Islamic banks geared for digital disruption? So I would like each one of you to please maybe spend 2-3 minutes in giving your thought process on that, then maybe you can debate internally as well.
Bismillah ar-Rahman ar-Rahim. Thank you, Irfan, for having me on the panel. I think there's no doubt that technology and fintech would be a disruption for the banking. Whether it will happen sooner or later, I think that is yet to be seen. I think the main question probably is that how soon. As you know, that developing countries are still, their financial sector, or banking sector is still quite behind the developed economies. So my guess is that, that developing countries can take up on this opportunity and really transform their banking and learn from the developed economies much faster than the other ones. So I think in my view, it would be that it does offer an opportunity and it will be a disruption, but how soon, I'm not very sure about it. Probably not in the short term, but probably in the medium term, you will see some sort of disruption in this particular case. I'm talking about mostly the Islamic banks.
Right, I think some relief that developing countries will take some advantage of this. Let's hear from Junaid.
In fact, when you talk about Islamic banking in Pakistan, I think it is unparalleled with the conventional banks, because we as Islamic banks are providing the same kind of services on the digital front which is being offered by conventional banks. In fact, Bank Islami was the first bank in Pakistan which offered the biometric ATM. State Bank of Pakistan has recently come up with a regulation in July, 2 months back, where they have opened up basically a biometric system to open accounts. Even the telcos who have appointed agents, and there are thousands of agents within the country, they are being used for opening bank accounts for people who are in remote locations. So basically the financial inclusions, which is the biggest challenge in Pakistan, because if you look at the number of people banking versus the total population, it is less than, I think, 30–35%. Among women, it is between 10 to 12%. So there's a huge gap there for financial inclusion and bringing people and public into the banking business. So yes, the disruption definitely is something which is there, but it's unparalleled. And Islamic banks are now I think coming up with solutions on the mobile, because the mobile wallet is the future, as Irfan Sahab said, that one day the banking will be on the mobile, and that is what is happening now. Perhaps Nazim Hussain, who is a friend of mine, he used to be the CEO of Zamir Bank. He said even the thela wala who's selling fruits, they will be transaction business on the phone rather than cash. So you go and you buy 1 kilo of apple and you can pay him through the mobile. So this is what is happening, and this is basically not too far away from now. So basically that's my take on this.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum warahmatullahi wabarakatuh. If you look at the disruptive play at a global level for Islamic banking, when Islamic banking started, or Islamic finance started 35 years ago, Islamic finance itself was supposed to be a disruptive play. It was supposed to transform the way banking was done from risk transfer to risk sharing platform. Unfortunately, over the 3 decades, instead of being disruptive, Islamic finance became submissive. It submitted to the norms and ways of conventional banking. So I did not see a disruptive play in any country where Islamic banking has been operating in the last over 3 decades. The reason why the disruptive play did not happen, one, there was state protection for conventional banking. The deposit insurance scheme and the central bank's lender of last resort provide protectionism to banking sector, thereby enabling the banking sector to mobilize deposits at cheap rates, often below inflation rate. The returns are all often below inflation, and the depositors get protection, liquidity, and a return for putting the money in the bank. And the second reason why banking was so strong and was not disrupted by Islamic banking is the payment system was also managed. So in order to safeguard the payment system, the government gave the deposit protection. Today, conventional banking is facing the challenge of being disrupted by this industry called fintech. So we saw in the last 10 years, today foreign exchange transactions are not conducted in banks anymore. It's being done by third parties. It could be Western Union, Speedlink. Many others have come to disrupt the norm in banking. So it is cheaper, better, faster, and you don't have to go to a bank to transfer your money. Within seconds, you'll get a code and someone in Indonesia or Pakistan can withdraw the money. Second, we also saw disruption in what we call peer-to-peer lending or marketplace lending. So this is picked up in America, in Europe, and in China, big time. But even peer-to-peer lending with a CAGR of 120, 130% is only 1% of the total lending in the market. And last month, Deloitte produced a very important research in marketplace lending, and they basically refuted the fear that marketplace lending will disrupt banking. They basically say it's rubbish. They say it can probably grow from 1 to 5%, but it will not change. In fact, banks will adapt. They will buy over this platform and offer financing to personal and corporates at a cheaper, better, faster way. And the reason they say why this disruption is not happening, they again bring the same two reasons. One is depositors are safer in banks because they get the deposit protection from the state and the free central bank lender of last resort. Plus, they hijack the payment system. So as long as these two things are considered as part and parcel of banking, basically deposit protection, central bank lender of last resort, and payment system is managed by banks, I don't think there will be much disruption. There could be erosion. For example, previously corporates used to borrow money from the banks. Today in America, 80% of corporate borrowing is done through capital markets. Malaysia, almost 70%. Today, corporates don't come to banks anymore. If they are rated, meaning medium to large corporates are all rated, they will go straight to the capital markets, borrow 1 year money all the way to 20, 25 years. So banks have moved away from lending money to managing capital market instruments. So while disruption is a key concern, as long as these two protections are in place, I don't think it will be a major issue for banks.
Always difficult to speak after Rafe, but I'll pick on a few points. So at EY, what we are seeing is, let's take a step back first here. Why is digital disruption relevant for banks today? Why? Because one, it is going to make transactions incredibly simpler. Two, it's going to make it incredibly affordable, cost effective. And three, it's going to make financial service a lot more accessible, right? I mean, through branchless banking and through other stuff, right? And at the heart of this digital disruption is data. And three areas that we are seeing across different markets which are clearly getting disrupted is wealth management, is payments, and is lending, right? I mean, let me give you a few examples. On wealth management side, till yesterday, it was UBS and the Credit Suisse of the world that were addressing the high net worth individuals. And the minimum ticket size to walk into that bank and ask for a good advice was $1 million, right? Today, you've got the likes of Nutmeg or Betterment or Wealthfront, which are using robo-advisors, i.e. very sophisticated algorithms at the back, to allow me and you to walk in with $100 and get the same kind of advice and same kind of portfolio allocation, right? So wealth management industry is absolutely ripe for disruption, one. Payments, we've already heard enough. TransferWise is another example, right? And a number of central banks today across the world, in GCC, in Pakistan, etc., are doing audits of the remittance business of a number of banks. Why? In a number of different cases, remittance cost to customer was as high as 10% in different charges. That has come down by 80% by fintechs like TransferWise, right? And again, using sophisticated modeling at the back. And third is lending, right? Or financing, right? That is completely getting disrupted as well. Me and you, putting our money in banks, are getting how much return? 0.5%? 1%? Maybe 2%, 4% at best, yeah? Beehive. How many of us have heard of Beehive in UAE? Okay, so it's a peer-to-peer lending platform. And it is providing financing to SMEs, right? Anywhere from $25,000 to $125,000 in 7 days' time. And I can invest starting from $100, 100 dirhams in fact, right? And returns, Sharia compliant, right? It's all structuring Sharia compliant. And returns that I'm getting is between 8 and 12%. Where will you get 8 to 12% return and be able to participate in Pakistan's context? You know, if CPEC comes on board, right, there is going to be a tremendous upside. How can a common man on the street participate, right? That intermediation by banks is getting disrupted. And there are examples. So wealth management, payments, and financing, I would argue, are going to get disrupted big time.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. I think generally Islamic finance is predominantly retail banking. Nearly 80% of the assets of Islamic finance are offered by retail bankers. And talking about technology and the advancement of technology, I think it's important for Islamic commercial banks to offer products that's geared to customer groups. And in particular, I like to talk more on the younger generation who are very much technology savvy, and their technology is part of their DNA. A study in the United States that defines Generation Y, those who are between 18 to 25, and Generation X between 25 and 50, probably the average of this room. These people emerging as a new power for banking and retail banking in particular. Their annual revenue is around $200 billion. These young people, they have high appetite for financials, and they have their own needs. And I think it's important for Islamic banks to cater for this kind of young people, to try to develop products that will address their needs in the education, in entertainment, in saving, help them make a living in our society, like getting married as early as possible, because many people, especially as you know, with these kind of economic downturns, find it difficult to make families. So afford a house, or even if you already have a house, then maintaining your education costs for your children and so on. So I think it's important for retail bankers to focus on customer groups and try to develop products that help them find their way with these difficult times. And I think I'll stop here with that points.
Right, I think a good discussion. I never thought that we'll be discussing disruption to the conventional banking industry from Islamic banking. So that was a new perspective which I really picked up during the session. In my own view, I think Islamic conventional bankers do feel the heat of disruption from Islamic banking. Obviously, like we always say that, for example, Kodak went out of business. If they'd gone into digital phone, they probably wouldn't have gone out of business. So most of the conventional banks in Pakistan, at least, we see that they're opening conventional Islamic branches as well. So in order to keep up with that pace, banks are coming towards Islamic so that they don't become obsolete, or they don't face the risk of disruption at the hand of Islamic banking. So I think that was a new facet which I learned, and in Pakistan I see that conventional banks are coming this way, which is good for Islamic banking. But what we should really be careful and beware is that all banks faces the risk of disruption. And I think being Islamic bankers or practicing Islamic banks, we should try to see that that tsunami doesn't come on our counters. So we should stay more focused on innovation, new challenges, customer service, and technology. Like Brother Hatim said that the Millennium X and Millennium Y, there's a big difference in terms of thinking of the younger generation. They don't want to do anything which is not on an iPhone or a internet. Obviously, we still use pen and paper. They don't. So if we can move to the next topic on the brochure, which is innovation and product development. You know, I've been involved with Mizan Bank right from inception 13 years ago. And when we were as small as 10 people and 1 branch, I always used to say that the success of Islamic banking is that we should be able to have a product for all our customers. As long as the underlying product of a customer is Sharia compliant, we should give them a financing solution. So it's no, you know, it's no good for us to tell 50% of the people who come to our counter that, sorry, you know, we don't have a solution for your problem. Otherwise, they'll go to conventional bank. So really, our job as Islamic banker is to not just make the bottom line money, which is obviously very, very, very important, but also to ensure that people stay away from riba. So any customer who comes to us who want to stay away from riba, if we don't give the solution to them, then I think we've lost the battle. We've lost the reason for existence. So, you know, I mean, our existence shouldn't be just, we should be just one more bank on the same street. Our reason should be that people should come and get services in a Sharia compliant manner. So like Tahir Sahib said in the morning that, you know, so that we stay away from the war with Allah and Prophet Muhammad Sallallahu Alaihi Wasallam. So I think that should be our underlying factor as well. So with that in mind, I would start the discussion with Brother Rafe again and Junaid as well, being the 2 CEOs of, practicing CEOs of bank. Rafe has joined recently as the head of CIMB Islamic, which is a very big, probably the biggest window operation in Malaysia, Rafe? Second largest. With Rafe, probably it will become the largest, inshallah. And Junaid, who is the country head of Dubai Islamic Bank, which is the, you know, who started the Islamic banking as far as I think the first Islamic bank in the world, right? In the UAE. So with these 2 people here, maybe they can shed light on how we're doing product innovation to make sure that whoever comes to our counter is actually served by an Islamic bank. So Rafi, you want to start?
So I remember this similar question was raised back in 2004 or 2005 in a forum like this in Istanbul. Question is the innovation in Islamic finance real innovation? And my conclusion at that time was the innovation I saw, and I was part of some of the innovation, many of them were imitations. I didn't use the word imitation, I was being polite. I used the word, we were conforming to the conventional products. So instead of lending money to buy a car, Islamic banks will buy the car and sell it on credit terms. But in real economic sense, we have created credit. Credit through loan and credit through sale. So Islam has prohibited money lending, but has permitted credit sale, for example. Now, the reason why Islamic banks were forced to conform to traditional form of credit intermediation is again going back to the subsidy in banking. The banking protection allows banks to mobilize deposit at a cheap rate and offer loans at a very competitive rate. Any other competitor who comes to the market with a differentiated proposition could not challenge the cheaper cost of borrowing loans in the market. So Islamic banks, in order to survive, had to conform. But I basically said in the years to come, Islamic banks have to go to the second stage of improvement. You know, the Japanese started with the 3 I's. First they imitate, then they improve, and then they innovate. The Koreans are doing it very well. The Chinese are doing it very well. So Islamic banks have to move from imitation to improvement. And the improvement can happen through the examples given earlier on the fintech side. So instead of, for example, just giving a credit sale for car financing, we improve on it. We make the credit sale transaction more equitable, more sustainable. For example, suitability test. Today, most Islamic banks will sell the product on a product push basis. You know, the branches, the salesperson will have, okay, you must sell, 10 car loans or car financing this month, 20 credit cards. Everybody goes out and tries to find a customer. Now what Islamic banks need to do is move towards needs-based or suitability-based proposition. That means you will have a revenue target, but you don't have to sell 20 cards this month. You need to make sure you get X amount of revenue. You interact with the customer, and today the tools are available. Like we saw on the wealth management side, how robo-banking or cognitive banking helps us to provide these services at a most affordable, competitive cost, which we could not even dream of 10 years ago. So we have to improve on the way we sell. Again, our documents are normally more complex than imitation products are supposed to be cheaper and probably look alike, but ours is costlier. How can an imitation product be costlier than the original? The only reason we can still do it is because there is a halal certificate attached to it. So we need to make our product offering a lot more simpler. Customer experience should be better than conventional. So that's where Islamic banks are heading. We improve our product documentation, we improve our customer experience, we improve the disclosure. Islamic banks must disclose the real cost of financing. So if you're giving a fixed rate, non-reducing balance for 5 years, you must also educate the customer, provide financial literacy, saying the APR is actually more than the fixed rate. So all these things, Islamic banks are actually improving. I see a lot of improvement in that area. The third stage would be the actual innovation. That one I have not seen yet. Now we are seeing, for example, in Pakistan, you have the running mudarabas. The overdrafts are being done on a mudaraba basis. Now, I have not seen the product, but if you actually use global standards on disclosure, I doubt you'll be able to do the product here. I have not seen the product, but based on what I've seen in many markets, if you reduce the disclosure standard, then you can do. The moment you increase the disclosure standard, the cost of audit and due diligence goes up, the product becomes less competitive in the market. So this is the trend I see in innovation in the market today.
Well, as my Sharia advisor, Dr. Hussain Ahmed, he says that in conventional bank, there are just two products, which is deposits and loan. But in Islamic bank, there are many products. You have got musharaka, mudarba, ijara, musawama, salam, you name it. And in terms of innovation, once I went to him requesting him to structure a finance for somebody who was in gold trading. And he said, I don't have a product, but if you give me 24 hours, I'll have to go through a few books and I can come out with a product. We can do in gold. Although gold is a cash-like transaction, but still, he said that there are ways that you can innovate and come up with a structure. So in terms of the Islamic banking, the product range is tremendous, and customers can come and choose. Yes, the telcos and the branches banking, which has come in Pakistan, is very strongly. They have really revolutionized this product innovation. Now we can see that small people, an illiterate person who is having, see, the mobile is in the hand of almost everybody. So they can do transaction through their mobile. Not only they can open an account through a very simple apps which is available now, they can do fund transfers. They can send money from one city to another city, from city to villages to their home. These have all come through the innovation in the telcos and the branches banking. Even now that the Takaful is plugged into this in the apps, wherein you can buy a small shop which is selling bakala or a repair shop. They want to insure their outlet. They can do it Takaful for a small amount, going through the app, and you don't have to go to insurance company. So this innovation and product development is a continuous process, but in Islamic banking, in my belief, that we have got much more range of products to offer as opposed to the conventional bank. And then obviously it's not the end, but things are coming up now. And for instance, the payment, we have a Benazir income support plan. So people in villages, they get that money through mobile apps now. P2G, person to government, you can pay their challan or their taxes through the mobile. So these innovations are coming in, but obviously there will be lots that we'll be seeing in times to come.